This is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past couple of days. Yesterday we saw the UK government lay out its proposal to gradually reopen the economy. It seemed to us to be a fairly tentative proposal, suggesting that the reopening is going to take place over a period of months rather than weeks, and very much reflecting the uncertainties that we still have around the trajectory of infection. Will a reopening be accompanied by an increase in infection rates? And what would that mean for the government's policies and potentially its need to reenact some of the lockdown that is gradually being lifted? Outside the UK, we do see signs that some of the reopening has been accompanied by a spike in infections. We've seen some headlines to that effect in Germany. And we think, given the rally that we've seen in financial markets, it's something that financial markets will pay a lot of attention to. We think that financial markets are looking for a relatively swift recovery from what is a very, very deep downturn. And information that either validates or invalidates that is going to be significant. Changing gears slightly and turning to the US, we saw employment numbers on Friday, the so-called non-farm payrolls report. It's a monthly report that usually gets a lot of attention. And it, broadly speaking, showed what we would have expected, which is a very, very sharp drop in employment, sharpest drop on record. But nothing that was of great surprise to financial markets, given the weekly data that we've already seen. And so the financial markets response to that was really quite muted. Again, we continue to think that financial markets are looking for a very deep, very painful, but still relatively short recovery. And that's really where we're going to focus our attention in terms of validating whether that is a fair assessment or not. Interesting in the report, by the way, to see that the average hourly earnings jumped a lot on a year-on-year basis, sadly reflecting the fact that most of the job losses have come at the lower end of the income spectrum. At the lower wage workers have suffered disproportionately during the current crisis. And that raises some interesting questions for the future about really how the economy will respond, or how the economy will change. Will we see a shift away from capital to labor in terms of policy, in terms of behavior? And this has implications for things like dividends, for share buybacks, for a range of corporate actions. And it's something not perhaps for right this week or right this month, but going forward, raises the questions about how the economy will be restructured. And what impact the crisis will ultimately have from a longer-term perspective. Thank you very much for joining us, and look forward to speaking to you again soon.